In this video, I'm going to talk about breakout stocks. The breakout stocks have four stages of stage analysis: stage one, stage two, stage three, and stage four. Stan Weinstein talks about this in the book Secrets for Profiting in Bull and Bear Markets. I have no affiliation with him, but it's a great book. You should consider taking a look and reading it. I'm using Palantir here as an example, but we're going to go through stocks that are getting ready to break out or have recently broke out, just so I can show you the stage analysis. We have stage two right here. We're going into stage two, and then up here we're in a stage three top, and then we break down below the 30-week moving average. That's stage four, and then we have consolidation here in stage one, and we break back out. So this breakout is where you'd want to buy Palantir. So that was on June 16th, 2023. Or anywhere above the 30-week moving average, May 26, 2023, or on any pullbacks after the breakout. So here would be a good entry on September 22nd, 2023. And it just keeps riding higher. If you would have bought back here, even if you bought it at 16 when it first went all the way up here, right now you'd be sitting on some big profits because it'd be 42.97. So that's what the long-term 5-year chart is the most important. But for this video, we're going to go through the quant, we're going to go through the dashboard, the trend channel. We're going to look at the 30-week chart so we can look at the weekly moving average and then the 5-year chart for each stock that I'm going to talk about. So let's get right into it. The first stock that we're going to go through is going to be Zoom. So we're given the business metrics a score here, and Zoom scores very well. It gets an 82.7 for a score of B, so it rates out as a buy based on its business metrics. We have some ridiculous 5-year average PE of 381 times. So this trailing 12 months and forward earnings are what it would be trading at if it was to trade at 381 times. It's not going to probably ever get back to 381 times. Right now it's trading at 25 times, and its forward PE is 13 times. So this looks cheap on a forward basis. So for valuation purposes, it looks like a reasonable entry point. Its PEG is not very price to sales is okay for something that's growing like this is. And then the rule of 40 would be if you didn't have sales, but we do, our earnings, but we do have earnings. If we go to dashboard, we can see the breakout was here on 823, and then we pulled back. So that's really where you want to get in when on any pullback once you break out. So we pulled back to 67.18 after we broke out to 70.14 2 weeks later, and then it just went higher. You can see we had relative strength. We're comparing this to the Qs because you can't see the number here, but it was outperformed on 823 by 20%, and then it's kind of just been in line with the market since then. If we look at the trend channel, this is what we would want the trend channel to look like. I'm going to just draw real quick what I'd want the trend channel to look like if it was perfect. This is not perfect, but it's not bad. You want it just to be straight across, you know, a line across this way, and then a line like this. And then I'm going to do that one more time here. A line across like this. So it's pretty much equal. And I know my line's not perfect, not all the way across, and then I would just, we'll put it in dark blue here. You'd want the price action. You probably can't see that very well, but you want the price action to be inside the channel and then break out of that channel. And you can see we have broken out of this channel right here. So that's bullish for Zoom. And on a daily time frame, the daily MACD looks like it's getting ready to cross. So this is from Friday. I'm making this video before the open on Monday. Looks like it's getting ready to make a bullish cross. So that's also bullish. If we go to, and you can put your stop wherever you want, but I have this set at 10% below the 30-week moving average. So your stop would be $56.73. If we look at the 30-week chart, we can see that the MACD is open, and it's been open for several weeks, but it is converging together some. But I would consider the 30-week moving average as a level of support. So if you get any pullback near this 30-week moving average, which is $63.03 right now, that's where you would want to take a position, because this has just broke out. Or you could take a partial position right now and then add to it if it pulls back. And then we'll just look at the 5-year chart so you can see what the breakout looks like. So this was stage 2 right here, and then we went into stage 3 right around here of consolidation, and then we broke down into stage 4, and then almost for 2 years now, a little over 2 years, This has been in a stage 1 consolidation, and we're just breaking out, and we're barely above the 30-week moving average. So if you remember the Palantir chart I showed you, that breakout, that for a long period is going to go higher if it stays above its 30-week moving average. So there's a lot of upside and little risk if you put in a stop 10% below the 30-week moving average for Zoom. But you have to look at these stocks. These really aren't trades. These are more of investments. You want to get into these early and hold them for a long time. You may be holding these for 1 year to several years, as long as they're above their 30-week moving average, to make a lot of money. The next stock we're going to look at is Autodesk, and that has traded at 93 times over the last 5 years for its average PE. Its current PE is 60 times, and its forward PE is 31 times, so this looks like a good entry point. 93 times is nothing crazy, because lots of stocks get up to that level. Trailing 12 months earnings per share, if it was a trade at that, it would be a $457 stock. If it was traded at the forward earnings, it would be a $860 stock, but right now the current price is $292. It has a PEG ratio of 3.64 based on Finviz, and a price of sales of 10.91. The rates out is a strong buy on the business metrics. We do have a real small buy here. This is probably an option exercise. Sometimes insiders do get options, and it's being this small, it's probably an option exercise. It's a $62 billion market cap. If we go to the dashboard, we can see we have lots of buying volume. We are well above our 30-week moving average and trending up. We have relative strength against the market, against the Qs here. If we go to the trend channel, we're tilting up on the trend channel, but we're breaking out of it. So this is a different criteria than swing trades, right? This is breakout stocks, so just keep that in mind. We have a daily MACD that is open. 10% below its 30-week moving average would be $218.90 for your stop loss. And that's just a guide. You can put it at 15%, whatever risk you want to take. You have to decide. And I have a spreadsheet that I'll leave a link to in the description that will have this in there for you, so you can. It's on the trend channel. You have to make the trend channel and the MACD yourself, but this part is there, so you can just pick that stock, and then you can put in whatever stop you want, and you'll see what the price will be. 30-week moving average, we have an open MACD that is just trending up. That's bullish. So this just has institutional buying pressure. Lots of institutions are putting money into this. On a 5-year chart, this isn't as great as Zoom was, in my opinion, for an early entry, but it's still a decent one, because we do have the stage analysis here, stage 2, then we had stage 3, stage 4, and now we're in consolidation, and it keeps trying to break out, but it's struggling to. This may be the final time where we get this breakout, because we did break out above the upward trend line here, the blue line. So, and the 30-week moving average is curling up. So I do like Autodesk. I just think Zoom has more long-term upside. I think they both have long-term upside, but Zoom looks like a real early entry point, where Autodesk is not as early. The next stock we'll talk about is Starbucks. That traded at 48.9 times for the 5-year average, 27 times for the current PE, and 24 times, or about 25 times for the forward PE, and 27 times for the current PE. That would be $174.50 based on the trailing 12 months if it was a trade at the 5-year average PE, and $189 based on the forward earnings per share. And the current price is $96.84. We have a PEG ratio of 2.91 with price of sales of 3.01. We do have 82, but we're not getting anything for return on equity, so we need to just take that out, and then it becomes an 81. And that's still a buy, and it gets a score of a B. We have insider buying on September 6th, 34,380 shares. So that could be a buy or an option exercise. We're not sure, but that's probably a buy. That might be a buy by this director. If we go to the dashboard, you can see we broke out here on August 16th. And we went up and we pulled back, and now we're just going up, and our 30-week moving average is trending up. We had that right here. We had relative strength, and now we've been trading in line with the market, or maybe slightly underperforming it since that breakout. The Qs are in an uptrend. If we go to the trend channel, this is a downward trend channel, but we have broken out of it. On the daily time frame, the MACD looks like it's getting ready to cross here. A 10% stop loss below the 30-week moving average would be $76.64. On a 30-week chart, our MACD is open and above, but it is converging together, so that could mean this crosses below that we could get a better price for Starbucks if we want to buy it on the breakout. you may get a pullback. And you can always dollar cost average into this. Take a third of a position or a quarter of a position, and if it pulls back, you take another third or a quarter, and so on until you have a full position, and then put your stop losses in. If we look at this on a 5-year chart, it's kind of just up and down. So stage 2, stage 3, stage 4, stage 2, kind of went from stage 2 right into stage 4, and then a real short period of consolidation, and now we're breaking out. So the longer we have consolidation on a breakout, the better. And we don't have a lot here, but Starbucks is breaking out, and the 30-week moving average is curling up. So this looks like a buy here, and it's getting ready to break its upward trend channel. You can see this on a long-term time frame. This is in an uptrend. So this blue line here is the trend for the last 5 years. So over the last 5 years, this is in a upward trend. And you want to buy stocks that are in an upward trend over the long term when they pull back and then they're breaking out again. So just keep that in mind. This looks like a good investment, a good option for a breakout stock, but it's still Zoom is the top one of the 3 that I've shown you, in my opinion. I would probably rank them Zoom, then Autodesk, then Starbucks in that order so far. So the next stock we're going to talk about is Illumina. They have a 5-year average PE of 68 times with a forward PE of 33 times and no current PE. So they lost money over the trailing 12 months. You can see $19, but their forward PE, they're expected to earn $4.41. And that puts them, their current price would be double what it is now if it was to trade at its forward PE based on the 5-year average PE. It ranks out as a buy based on the quant system, just barely. It just gets to 80. So it's, anything under an 80 would be a hold. So just keep that in mind. We do have insider buying on February 22nd, and they bought quite a bit. The CEO bought almost $1 million worth of shares. And that was at, let's see here, 135.29, and the price right now trades at 146.07. So you can get in pretty close to what the CEO paid for this. And then if we go to the dashboard here, we can see this has just recently broke out back over the summer. We didn't have a lot of relative volume, but I would say right around here, this is our relative volume, 8, 9. And we, if we could, on 8, 9, this was our breakout. I can't really hover over it. Oh, there we go. $123.56 is what it traded at. And now it's all the way up to 146.07. So you may want to wait for a pullback here or take a partial position and then add to it. If we look at the trend channel, it's in a slight uptrend, but it's breaking out of that trend. Our daily MACD is converging together here. If we get across here, that could mean that the price is going to come back into this channel, and we may get a better price for this. So just keep an eye on the price action for Illumina. You may get a better price. The 10%, if we were to put a stop loss in 10% below the 30-week moving average, that'd be $108.50 for our stop loss. If we look at the 30-week chart, our weekly MACD has been open for several weeks since June 20th and just trending up, and now it's above the 0 line, and it's pretty bullish because it's been on an uptrend. It has, from last week to this week, it has converged together a little bit, but not much. And we are well above the 30-week moving average. If we look at the 5-year chart, this one reminds me more of like Zoom. So I think this is a good early entry for a long-term uptrending stock in Illumina. So you have your stage 2, then your kind of stage 3 here, but not much. It kind of went right from stage 2 to stage 4. And it's been going down for quite a while. And then we have a little period of consolidation here. But it's probably about since almost a year, not quite a year, last 10 months, roughly a year, if you count all this here, this little square here. And now we're breaking out, and the 30-week moving average is starting to trend. It's starting to trend up. So it's, it was 1925, 1931, and now it's back down to 1910. So keep an eye on the 30-week moving average and the price. This needs to go higher for the 30-week moving average to start to curl up. So if you're going to take a position here, just keep that in mind. Next one I'm going to talk about is Bristol Myers. That traded at a 5-year average PE of 25.33, and now it's got a forward PE of 7.66 times with no current PE. If it was to trade at its forward PE based on its 5-year average PE, the price would be 176, but right now it only trades at 7 times, and the price is 53. You had insider buying, but that was last year. The sum of the insider buying was $672,000. It's got a market cap of $107 billion. If we go to the dashboard, you can see we did break out right here. That was on July 26th, and then we pulled back, and then we went up, and we pulled back, and we went up, and then we pulled back, and we went up. And so it's making higher lows and higher highs, so that's bullish. So that's something to keep an eye on. We have some real relative volume recently. So that's good. That's bullish, and they're all green bars. And we have, over the last few weeks, we have some outperformance versus the market. Slight outperformance, not a lot. If we go to the trend channel, our daily MACD is on a bearish decline, but that could always reverse back up. So just keep an eye on that. We broke out of a kind of sideways trend channel. It's trending down slightly. If we go to the 30-week chart, we have a weekly MACD that's been open for several weeks, but it is starting to converge together over the last 3 weeks. So you see it was open by 1.27, then 0.97, then 0.89. So we want to see this turn and keep going back up. Or if it comes, often what will happen is it'll come and bounce off of the red line here. So the MACD will bounce off the signal line. And then if we look at our 5-year chart, this has been in a stage 2 decline, and we haven't had a lot of consolidation here. It just broke out of right from the stage 2 into a stage 4 decline, and it broke right out of a stage 4 into a stage 2 uptrend. So the stocks that are the most bullish are the ones that are in consolidation for a long period. So I like Bristol Myers, and it's worth a look, but it's not as good as Zoom was, or I think Illumina was the last one that looked pretty good. Let's go on to the next one. So we're going to look at Gilead Sciences here. This has a 5-year PE of 89 times, a current PE of 105 times. So it's expensive on its current PE, but its forward PE is 11.92 times. So it's very cheap on its forward PE. So that's, they're making a promise that they're going to make these earnings, and we got to believe them. $7.27 on its forward PE would be $649 if it was a trade at this 5-year average PE. And right now it's trading at above its 5-year average PE. So that's not out of the realm of possibility, but I don't think it'll get that high because it's only trading this high because of the promise of the forward PE. The current price is $86.72. We have no insider buying. It scores a B on the quantitative metrics here, the business metrics, but just barely because it gets an 80. It's a $107 billion market cap. If we go to the dashboard, we can see this. We had some real relative volume here, but we didn't break above our 30-week moving average. Right here, we had some decent volume, all bars, and we did break above our 30-week moving average, but they were not relative volume versus the previous volume. And over here, right here, is where we really get relative volume and we break out. And our 30-week moving average is curling up. So this is in a bullish uptrend right now. So this is momentum trading. So you want to take smaller positions and then add to them if it pulls back near your 30-week moving average. If we go to the trend channel, we can see it's sideways, and we broke out. We have a daily MACD that is getting ready to cross the signal line, so that is bullish, and it's been above the 0 line for several weeks now. If you were to take a 10% stop loss, that'd be $65.76. If we look at a 30-week chart, this is where we broke above the 30-week moving average, and we are trending up, and our 30-week moving average chart is trending up every single week for the last several weeks as well. Our weekly MACD is on an uptrend, but it is converging slightly back together, but this could easily bounce. It's still open, so it's bullish. And if we look at the 5-year chart, this did try to break out here, and then it broke back down below its 30-week moving average, so it went bearish, and now it's a second breakout. So I'd like to see this get back above this high. That would really give us some confirmation, but we have a curl to the upside of the 30-week moving average, so that's bullish. It's 86.72 right now. And the recent high, if you go back here, if you were to draw if I was to draw a line across, this would be my resistance. That's 89.03. If it breaks above that resistance level, that will be very bullish for this stock. So that's a good number to keep in mind and watch and see if it breaks above. So this one is Corning, and this one has broken out quite more towards the beginning of the year. So we've been in an uptrend for a while, but I still want to talk about it. It's got a 5-year average PE of 61 times with a current PE of 92 times, but a forward PE of 20 times. So on its forward PE, if it was to trade at 61 times, it'd be a $139 stock. But right now it's a $46 stock. No guarantee it'll trade at that 5-year PE, but average PE, but that's just something you can use as a guide. No insider buying. It does have a hold based on its business metrics, and it's a almost a $40 billion market cap. If we go to the dashboard, you can see this has been in a long-term uptrend, but when we look at the 5-year chart, this is only going back for 30 weeks, so we only have till April. I'll show you where this broke out back in February. We have some all green bars for the last several weeks and outperformance versus the market for the last several weeks. So that's good for this stock. That's bullish. It is in a 1-year uptrend. We have a daily MACD that's converging back together. If you were to put a 10% stop loss below the 30-week moving average, that'd be $35.18. If we look at a 30-week chart, we have an open MACD on the weekly time frame and a 30-week moving average that is trending up. And then on the 5-year chart, this is why I'm talking about this one not as a momentum stock or a pullback stock, but because it's as a breakout stock, which is a momentum stock, but because we had so much consolidation here, and then we broke out. And this was only back in February 2nd of this year. So this is where the breakout happened at $32. And when we have breakouts, they can last for several years. So it doesn't mean just because we're at 46 that it's too late to get into this. If there's any pullbacks near the 30-week moving average, I would definitely take an entry. Or if you really like the stock, you want to do further research on it, you could always take a partial position here and then add to it if it pulls back. The last one we're going to talk about here is 3M. This one is going to be similar to Corning, where has strong momentum now, but the breakout did happen this year. So I'm going to talk about it, and then I'll show you the charts. 18 times for 5-year average PE, forward PE 17 times. So it's trading about in line. Its forward earnings per share would be trading right around where it's trading right now. So is there a lot of upside based on valuation? No. Price of sales is 2.43, but that doesn't mean that these numbers won't change. Earnings get revised higher, and then the forward PE will get changed as well. And if the earnings get revised higher, the forward PE will come down. The market cap is $74 billion. If we go to the dashboard, this is in a 30-week uptrend. Any pullbacks, you can see it's just all green, mostly green in the volume. So that's very bullish. Recently, we've kind of traded in line with the market up and down, but we did have this big breakout right here. That was on July 26th. So on July 26th, this went up and it just kept going up. So a lot of times when that happens, sometimes you'll get a pullback, but that didn't happen here. So that's bullish for this stock. It just kept on trending higher. If we look at the trend channel, this is in an upward trend, staying right inside its trend channel, never breaking out of it for the last year, but we are at the upper end of that trend channel. We have a daily MACD that's bearish, but it looks like it's converging together with its signal line. And then if we look at the 30-week chart, we have a bearish MACD, but we are on an uptrend, which signals possible better prices coming. So keep an eye on this one if you want to get into it. There may be better prices coming, but the 30-week moving average is trending up week after week after week after week. So if you wanted to put a stop loss and go back to the trend channel, that would be $101.39. That would be 10% below your 30-week moving average. If we look at this on the 5-year chart, this is where you'll see the breakout. We had stage 2, then we went into stage 3 right here, and then stage 4. And then we had a little period of consolidation here, and now we broke out. So it tried to break out here on January, and then it came back under, but then it really broke out here in March, and it's been trending higher ever since. So any pullbacks, this is what you want your chart to look like. This has institutional buyers coming in. If your 30-week moving average is trending up like this and your price is riding right along above it, that's good. But anytime you get pullbacks, that's where you want to take entries. For me personally, I always take partial positions and then add to them as if we get pullbacks. If I don't get pullbacks, I just ride that partial position higher. That's all I have for you. I hope that video gave you some value. If it did, consider hitting the like and subscribe button, and thanks for watching.